Hi friends, my name is Rahul Jain. I am a SEBI registered research analyst. In this video, I am going to speak about a very popular investing style called GARP, growth at reasonable valuation. Peter Lynch came out with this particular investing methodology, and I am not going to bore you with the theory aspect of it. I am going to practically show you in this video how to go about shortlisting stocks that are growing. There is a growth in those stocks and the valuations are reasonable. So essentially, GARP investing style is a blend of growth as well as value investing together in one single stock. How to find such stocks? That's what I'm going to run you through practically with no theory. What we are going to do is we are going to head to TickerTape, a platform that I have been using since 2022. Okay, so here you have screener. Quickly click on that and you will see three options: stocks, mutual funds, etc. So I'll click on Indian stocks here and I say start screening. Okay, now you'll see a lot of companies coming here. Okay, now what we need to do is first of all get rid of all of these filters so that we can apply growth related filters as well as valuation related filters. Okay, so first thing I'll do is get rid of all of these: close price, P ratio, returns, etc. Get rid of all of them. Okay, now we just have market cap as our first filter. So I'm only interested in those companies that have a market cap of more than 5,000 crores, right? You can go with any criteria that you like. So what I'm going to do is go here and enter 5,000 crores. Okay, so I click on that and I get around 854 stocks that you can see on my screen. The names of these stocks do not matter. Please do not go and blindly buy any of these stocks. That's not the intention here. Please focus on the learning and the method that I'm going to teach you. Okay. Now after market cap, the second filter that we are going to use is return on equity. Very important. Okay, so I'm going to put return on equity here, right? And I want those companies to only come here which have given return on equity which is more than 15%. Okay, so if I enter 15% here, I get only 377 companies that have delivered return on equity which is around 15%. Now let me minimize these filters here, and the next ones that we are going to talk about is growth. How do I define growth? Growth is the earnings per share growth. EPS growth is what we look at. So first of all, we'll look at the historical EPS growth rate and then we'll come to the forward EPS growth rate. Very important. Okay, so three filters I'm going to use. First one, if I add here, is going to be EPS growth rate. So if I type EPS here, you will see three filters coming up. Number one is 5-year historical EPS growth rate. That tells me the long-term track record of a company. Okay, the next one is 1-year historical EPS growth rate. This is also very important because a company that might have been growing at a very good growth rate in the last 5 years, what if that company's EPS growth has slowed down in the last 1 year or so, right? So we want to capture that. Therefore, I'm going to include that as well. And then the third one is the most important parameter that nobody really takes into account in this method, which is the forward EPS growth rate. What is likely to be the earnings per share growth rate for a company for the next one financial year? Okay, now this is a pro filter. As you can see here, asterisk is there. TickerTape has a pro plan as well. You can go and subscribe to that plan. If you use my link and my code, you are going to get 45% discount on annual plan. This is a very good deal if you are a regular investor in stocks or if you want to learn stock investing. And also if you are a mutual fund investor, you will get a lot of benefits using TickerTape. You can use my link in the description and in the pinned comments. Use my coupon code. You're going to get 45% off on your annual plans. Okay, so I'm going to add this 1-year forward EPS growth rate here. Okay, so I've got these three filters here and I want only those companies to remain in this list which have delivered 5-year historical EPS growth rate, which is more than, let's say, 10%. Okay, that gets me to 237 companies, and 1-year historical EPS growth rate more than 10%. And 1-year forward EPS growth rate as well, 10%, right? With this, I get to around 98 companies that have a good track record of EPS growth rate in the last 5 years, 1 year, and the forward EPS growth rate is also more than 10%. Now, let me spend a minute or two and talk about this forward EPS growth rate. Very important concept. So for example, I'm going to pick any company out of these companies here. Okay, so let me open a company here, right? Let me open this one here. And what you see in this company is if you go to, for example, forecasts, okay, so come down here and you will see earnings per share forecast. Okay, now if you look at this icon here, you will read that these are the earnings per share forecast given by the analysts. right? So these are, first of all, estimates. These are forecasts. These are not guaranteed EPS growth rate. Okay, very, very important point, right? Second point is that they are backed by analysts. So a lot of analysts might have pulled their data, and that's what you see on this TickerTape platform. Now there are three things you see here. One is high, second is median, and third is low. Simply meaning that there are three scenarios here. Okay, because nobody really can predict EPS growth rate to the point. Therefore, three scenarios. High is 25.38% in this particular stock, 12.92 is median, and low is 2.01%. These three scenarios exist. For the screener that we just saw, if I go back to that, what you will note is that all of these companies, 1 year forward EPS growth rate here is represented by the median value here, 12.92%. So they have taken median base case here, and that's what they are talking about in the screener. Okay, I hope this concept is very, very clear, that these are the three filters we are using for EPS growth rate. Forward is not guaranteed, it is estimate, but it is backed by the analyst, or it's a consensus, you can call it. Okay, now if I were to go and now look at the valuation, so let me now talk about the valuation. So how do we know that these companies, that I've got 98 companies now on my screen, how do we know that these companies are at a reasonable valuation? How do we define that? Now there are various ways to do that. You can look at PE ratio, PB ratio, but one important parameter in this strategy that is being used is PEG ratio, which is price to earnings ratio, PE ratio divided by the EPS growth rate, right? Now on TickerTape, there is no filter as such which is ready-made that gives you PEG ratio. Okay, but you can create your own filters. Okay, let me show it to you. You can do it in front of me. So if I go to customs here, okay, you will see that a new filter is coming up. Okay, so let's say your filter 15, or you can name it whatever you like. Okay, so you might say that Rahul PEG ratio, okay, or whatever you want to call it. I'll show you the ones that I've created. Now simply if you start typing here PE ratio, okay, so PE ratio comes here. So this is a ready-made filter. Now if you say divide by 1 year forward, 1 year, actually let me type EPS growth here. So you see 1 year forward EPS growth rate. Because I have access to the pro features, this is coming in my list. I'll say 1 year forward EPS growth rate. So I've sort of created my own PEG ratio looking at 1 year forward EPS growth rate. Very, very important here. You can look at 1 year historical EPS growth rate as well, but I would highly recommend that if you're using this strategy, look for 1 year forward EPS growth rate. Okay, because the valuations that you're paying right now for, it's for the future EPS growth rate. I hope these basic concepts are very, very clear. What is a PE ratio? What is the EPS growth rate? If you do not know any of these, then I would highly recommend that go and watch my previous videos. A lot of these concepts on my channel I have covered. Subscribe to this channel because you're going to learn a lot. It's not a buy-sell recommendation. If you really want to improve your investing style, then subscribe to this channel. You're going to learn a lot, right? Now, if you just say create an ad filter, this filter will get created. Okay. So here I'm already getting an error because I've already created this filter. Okay. So let me cancel it. And what I will do is I'm going to add the filter that I've already created. So if I go and say PEG here, you will see PEG forward here. Okay, can you see this is what I created for myself? I'm going to add that up here. Okay, now you see these companies are showing me the PEG ratio from a 1 year forward perspective. Now I'm only interested in those companies where the forward PEG ratio is as low as possible. Ideal situation is that the forward PEG ratio should be lower than 1. What does it tell you? That you are paying for a company lower valuation for a higher growth. Okay, very simple. But what I'll do is, for me to be able to say reasonable valuation, then I'll say give me those companies which are having a PEG ratio, forward PEG ratio of between 0 to 2. Okay, so I'll say 0 to 2 here. That gets me around 50 companies as of now. Okay, so these are the top 50 stocks as of now where I see the forward PEG ratio which is between 0 to 2. Okay, now again, it's not that blindly you can go and invest in any of these companies. That will be suicidal, because this has given you a very, very good list to start with. Okay, and in fact, one thing you could do here is look at these sectors here. You can see subsector here. So if you are interested in two-wheelers, for example, or if you're interested in software services or IT companies, because there is a lot of correction that has happened here, right? You could look at sector-wise here. You can just club it by sector. Okay, and you can go ahead and look at the companies that you are interested in because of your portfolio. Again, very, very important point here, your portfolio, if it is not heavy, let's say in IT already, or if it is not heavy in two-wheelers right now, then maybe you can think of building allocations in that particular sector. If you're already, holding 20-25% of your portfolio into IT, then I would say that don't do that, because of course you have to have portfolio level rules as well. Okay, I hope that concept is very, very clear. So this is how you can shortlist companies anytime. Do not take any of these as recommendations, because this data will change, because the price will change. When the price changes, the price to earnings ratio will change, and the EPS growth estimates also could change time to time. I don't know when you are watching this video, but so far, if you're liking this content, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to come up with this kind of content for you at zero cost. Now you might say that, Rahul, we got 50 stocks. How do we move from here on? Okay, so first thing you could do is that you filter out this column here, peg, okay, and arrange these companies from lower to higher. Lower the peg is better it is. Okay, it doesn't mean again you go and blindly invest in any of these stocks, but what you need to do is you need to do a thorough analysis. You need to really understand why the company's valuations are reasonable right now. Okay, what is causing that? Because you cannot just go and buy a company without understanding why the valuations are reasonable right now. Okay, so for example, let's just pick up one of these companies here. So I'm going to click on NMDC Limited, not a recommendation at all. Please understand that these names might be very, very different depending on when you are watching this video. Okay, so I'll click on NMDC Limited here and I will open this in a new tab. I just want you to understand the framework here. First thing you need to do is ignore the price points here. You can go and do some technical analysis on the price chart if you want to do. That's not a problem at all. But my recommendation will be that you first go to the sentiment section here. What you see here is that TickerTape has automatically given you the summary of their June 2026 con call. Very, very important con calls you must read. Okay, try and read at least 2 or 3 con calls. You'll get a good picture about what the management is saying, what are the problems that the company is facing, what are the upsides possible in terms of the earnings per share growth, etc. Okay, now for example here, what you see is that one of the reasons that right now the valuations have dropped is that if you just click here, what are the challenges they're facing? One of trading hit to consolidate profitability. Okay, so their EBITDA margin was down, okay, from 42% to 33%, and the management says that this is a one-off. So what does this mean? That this is a short-term problem that the company is facing right now. Okay, therefore again you can read all of these points here and make some assessment about how big a problem the company is facing right now, because this looks like a short-term only. Now come and focus on the long-term growth drivers. Okay, so for example here you talk about the capex cycle. Again, I'll talk about capex cycle in a minute, but what you see here is that the company is planning to put a lot of capex. Okay, next 2 to 3 years they're planning to put around 40,000 to 50,000 crores of capex. So what does this mean? That the company is putting capex. Why is it putting capex? We need to find that out. But right now the challenge is the short-term consolidated EBITDA, and what the management is saying is that it has dropped, but they are reiterating the guidance to maintain EBITDA around 42 to 43% for FY27. So they're saying that it will be back to track by FY27. So you've got a good picture here that, overall companies putting capex, we need to understand why, but there is a short-term issue that is going on. This is how you go about analyzing. And here on TickerTape, you can just see this sentimental analysis. Generally, it gets updated very, very frequently, but if it is not, then you can quickly go and read the con call summary as well. Okay, so those attachments are also given somewhere down here. Okay, so you can go and read that. Now coming back to the full analysis of this company, that is the last step you will have to do. So for example, 9 months back on this particular company, I did a full analysis on my YouTube community. At the time, I used to do a lot of deep dive analysis of stocks. If you want to join my YouTube community, you are most welcome to do that. Simply go to my channel. First of all, subscribe to the channel and then hit the join button and be my guest. Okay. Now this information, although it is 9 months old, but there are few things that are still relevant, and I mainly want you to understand what are the things that you need to collate when you're doing the deep dive analysis of any stock. Okay, this is minimum you need to do. I'm not saying my method is the best method, of course not, but at least I try and cover a lot of grounds about a company before I make any decisions of buying, holding or selling a company. Okay, so for example, first of all, basic background you need to understand. NMDC, what is the company doing? So they're the largest iron ore mining company in India. So they mine iron ore and then they sell that iron ore, and steel is made out of that. So the demand is coming from steel, right? And you can see that the company is PSU, right? And they are 6th largest iron ore company in the world. So they are huge. Okay. Now, one thing that you need to ask yourself is that will this company's products be relevant next 5 years down the line? So iron ore, will it be relevant after 5 years, 6 years? Of course, yes. And why so? Because in India, the demand of the steel is still very, very high because a lot of capex is going in infrastructure. Roads are being built, bridges are being built. So steel demand is definitely likely to be there if you look at 5 to 7 years of down the line. Okay. Now again, it's not a recommendation about this particular stock, but I'll tell you the tailwinds. I'll also talk about the risk of the company because you need to have a holistic picture. Okay. For example, now tailwinds. Let's talk about that. So I read their annual reports for the last 5 to 6 years, and the summary was their production of iron ore. You can see on my screen 1978 to 2025. Okay. Now the basic conclusion I took out of that is that by 2030, this company's production target is likely to be 100 million tons. That is their management's aspiration. In 2025, how much production did they do? 45 million ton. And they are going to make it double almost, right? Within 5 years of time frame. Almost every year they are going to add 10 million tons of production. But if you look at the past history, the company was adding around 10 million ton in like 10 years, 20 years time period. So all of a sudden the company has gone very, very bullish in increasing their production in the next 5 years or so. For that, they would need money. Where is this money going to come? This money is going to come from capex. And here you see the capex picture. And again, if you go back to TickerTape here, you will see this capex data here, as I talked about earlier. Okay, around 40,000 to 50,000 crore of capex is coming up in the next 2 to 3 years, right? That is what will give them factories, plants, equipments, etc. to make this production go up to, let's say, 100 million tons of the target that the company is targeting. Okay, so what we have established so far is that the company is producing the product that is likely to have the demand. Tailwind is there. Company is going to put a lot of capex. That is what the plan looks like. So one could argue that this company is looking like having some long-term tailwinds. This is the first thing you need to establish. Okay. Most people don't do this. Most people look at the price points. Kitna stock gira, kitna nahi gira. We don't want to do that. We want to really understand the company. Okay. Now comes the fundamental analysis you can do. You know, what is the ROCE in the past, debt to equity ratio, right? Now this data would have changed. Okay. Because this is slightly old analysis that I did 9 months back. One thing that people miss out is the cash flow. I would want you to do cash flow analysis. Here, for example, you can see that cash flow has been a problem in FY25. I don't know about FY26. Again, you can do that analysis. You must look at the companies where the operational cash flow is there. It is positive. The company is not burning the cash every single day or every single quarter or every single year. Please avoid those companies, right? Whether they are cheap or not, it doesn't matter. Okay. Now, other things you need to look at is the valuation. So we have already looked at the valuation, but what you could do is look at the PE ratio, the PB ratio, the PEG ratio we have looked at. Look at the median PE ratio, median PB ratio of the company. Make sure that it is trading below the median PE, below the median PB, because you don't want to pick a stock that has a long-term tailwinds at a very, very high valuation. Remember, we are talking about reasonable valuation. Okay. This is how you would go about doing the complete detailed analysis. Again, coming back to the list here. There are 50 companies here. Okay, you could do further, shortlisting in that. You might want to say that, Rahul, I don't want to look at 0 to 2 as a PEG ratio. I want to look at, let's say, 1.5. Okay, that brings you down to 29 companies. Now you can go and study these 29 companies. Okay, equity research does take a lot of time. It's not something that you just go and buy because a company's stock is down by 10%, 20%. Of course, technical analysis helps you make the rounded decision, but if you want to go with GARP strategy, which is growth at reasonable valuation, minimum parameters I have given you. I have given you EPS growth rate forward, as well as the PEG ratio, how you go and build your own filters. I've shown you very simple filter creation, PEG ratio forward. On TickerTape, you can do a lot of filter creation by yourself, right? If you want to go for the pro plan, use my link and code, you will save 45% for yourself on the annual plans, right? In this video, I've tried to give you this strategy. Let me know in the comments if you have any questions. I hope you enjoyed this video. I'm going to see you in my next video. Until then, keep rocking.